before it started, by the way. So the idea here, well, CPI was in line with the expectations. So did not, if you are looking at the CPI for a trade, you could not have found a trade here, right? So the trade was here. This is what we're following, and actually, this is what we're following, right? So we've been tracking this chart pretty much every single day, and we know that this would come down. If it breaches the 5, we're going to test the 8 right about here, 3.4. This is still the by the way, am I audible? Am I audible? Can anyone hear me? Yes. Okay. All right, cool. Cool. So the chart that I'm looking at here is the US 10. This is the guiding chart. Nothing else actually matters. If you're looking at levels and to go on a trade, to put on a trade, that's where you look at the SPX or ES or any other chart. But this is the chart that is really behind everything. And as long as uh, the chart the price here was moving up, this is the US 10. Basically, you had the market moving down. As soon as it peaked and started to come back down, market started to stabilize and started to come back up. So that is exactly what is happening here with the markets and the data. And I'm still thinking that the 5 is breached. Now the 8 is here, 3.40 area. This should get tested. So another 7 basis points, 6 basis points on US 10. What would that translate to? That would translate to this guy, and this is DXY. We've been tracking DXY to the downside, and we know that DXY would come down along with the 10. And now we are tracking DXY into this number 101.60, 101.70 area. And if and then look at this data here on the. Let me pull up another chart so it's easier. Come on. Right. So this is DXY on the week. And DXY is getting oversold. Clearly, it's getting oversold. However, we still have MACD to the downside. That is fair enough. And I still think that at some point in time, DXY will create a sub 100. Very likely, it will look to bounce around 97, 80. But that's story for another day. But why am I showing you this chart? Because I'm trying to make a point that DXY is getting oversold here. Cycle very likely has looking for a bounce. So if it bounces, probably we're looking at 103.80, not really looking beyond 103.80 as of now for DXY. That's a higher the threshold. If it clears for some reason, I don't know why, but if it does clear for some reason, it's going to go hit 104.63. That's the bigger picture. Now coming back down to DXY here, and if the US 10, as we are projecting it to come back into 3.41, 2.4, then I think the DXY will come back down here into 101.60, 101.70, and we're looking for a bounce. And if the bounce starts, it could very well last till here, 102.80. Now, 102.80 was acting as support all throughout, and now it should act as resistance, right? So that's the upper end. If I'm trading right now, that's the upper end I'll be watching around 102.70, 102.80, and to the downside I'll be watching 101.60, 101.70 area. So this is the chart that the majority of the market participants are watching to probably take a position or rather look at this chart and trade the stocks. Now, what would make sense here is this chart, Apple. Apple on the month, it is still detached from its 5 all the way up here, or the one standard deviation is 138. I'm thinking that because the CPI has come in lighter than, or rather in line, and the expectation from CPI is to move lower. Very likely, you can expect Apple to move all the way up here, probably run up into the earnings around 138 to 139 area. That's again a picture for a higher time frame, and this is what I'm watching now. So this chart is clearly suggesting that yesterday it touches the 5 and that cleared, then we are hitting the one standard deviation. And this is where I was getting my numbers from. Where are my projections? Let me quickly check my projection here for Apple. Right, 132, 135, 15, 136, right about here. Right about here. It should test this number right about here. 135 to 135, 15 area. Then if that clears, 136. That's the area I'm looking at for Apple to get tested. About if it clears here 134.70, then we are looking at a 135 hit on the daily chart, and this is where the conviction is coming from. The MACD is still crossed to the upside, and I did put out a note I think last week that last time and this the MACD got pulled down this low. We had a pretty decent rally for Apple all the way from here 135 to about 155. So 20-point rally. Not sure if that's what we're going to get this time from one. We already ran about 10 points from now, but from 125 to 135, give or take. So the idea here is that and yesterday, this is what we are looking forward for, a hit of the mean, and then very likely a hit of the upper inner Bollinger Band. So right now, that's what is getting tested. If that clears, very likely it's going to go push all the way up here into 138. That's the idea for now, right? But the base case is done. Pretty much the base case is done. And if it clears here, I'm expecting a push all the way up here into 135 area. That clears, looking for a push all the way into 136 area. If that clears, we'll reassess the situation all the way into probably 139, 140. And that is coming from the monthly chart all the way up here. The 5 is still detached at 139, 140, and the one standard deviation is sitting at about 138.50. Right. So if Apple takes this trajectory or this path to the upside and goes and connects with its 5 on the month, then you will have ES obviously moving higher. Now, coming back to ES on the higher time frame, ES, we are still tracking ES. This is where I was getting my numbers from. There's a 40-20, 40-22 area that clears. We're looking at 40-50 area, 40-50, 40-55. That clears, very likely push all the way up into 4170. And this area 4200, this is still the target. Uh, Very likely, if we are looking at earnings contraction not as dire as being projected right now, if that situation gets resolved, then very likely SPX will enter this zone around 4200 to 4260 area. This is still the kill zone here. Not really plotting anything above this. Very likely it's going to go hit this number and probably start to take a breather from there. But not in a straight line. Very likely. So this is what we are watching based on Apple. If Apple clears that 135 number, then we are looking at 4022 to clear on ES. That would mean about 4,000, 4,002 on SPX, right? So that 4,000, 4,002 level should act as some decent resistance on psychological resistance on SPX. But if that clears, then very likely it's going to go hit this 4055. And again, that depends on Apple. Apple needs to clear that 135 and start to push into that 136 area. And if that happens, then we have this ES pushing up towards 4055. That would translate to SPX hitting that 4030, 4035 area. All right. Let's go here. Yeah, 40, I think 40, 20. Yeah, cool. Right, let's go here. And if ES clears this number, and it's a big if, depending on Apple and Microsoft, of course. So if it happens that ES starts to push to the upside, 4055, and clears there, then very likely after that, we're going to hit this number, 4072. So if Apple pushes up and Microsoft pushes up, and there's no reason why it would not push as of now. I don't see any other, as of now, until I'm reading DXY incorrect, that DXY will not, start to push to the lower downside or and pushes below that 1 or 2 mark. Maybe it will stall a bit before actually cratering into that 1 or 2. Simply why it would stall because of these oversold conditions here on the weekly. So this might help DXY, stall that eventual fate a little bit. But after this, I'm still expecting DXY to come down into the 21 on the month. Right. So that's the idea there. And that's the reason I'm looking for an upside. And if DXY start to push to the upside, then very likely we're going to come back. The market's going to come back. And this is where I'll be trading that market on the 1 hour time frame. The five, right about here, 4,000, that breaches, very likely we're going to test this 39.98. And the mean is sitting right around between 39.91 to 39.88. So these are all the bounce spots. I'll be looking for a bounce around here, 39.89, 39.90 area. That breaches very likely 39.87. That breaches very likely 39.78. And not really plotting anything below this line here. As of now, the 50 moving average on the 1 hour, this is where we reassess the situation. It was here down at 39.50 area. Now it has moved up to 39.58 area. So that would translate to about 39.35 to 39.40 on SPX. Not really plotting anything below that as of now, but we'll reassess if it actually starts to breach below that number. Cool. And that's the reason I started with this one, DXY, right? So DXY is the thing that I'm watching, and beside DXY, well, actually watching the 10-year, and to confirm that the trade here is DXY. And DXY here on the lower time frame, on the 1 hour time frame, this is what is happening after the CPI. It gave up. Now it is coming back up. This is just technical stuff. Broke the third standard deviation actually, and coming back for the second standard deviation. Same story. If it clears here, the five, the eight, and then the mean, right? And if DXY starts to take this trajectory to the upside, probably here 10280 is the number that I'll be watching. If that clears, then very likely scenario it's going to go back into 103 10, 103.11. And to the upside, if DXY clears this 103.20 area, then very likely I'm going to start taking DXY seriously again. Maybe a contrarian trade that the dollar hasn't peaked yet. So that narrative will start coming into picture that even after a flatter CPI and Fed expectation to move to a lower pace of hikes, if right now that is the sentiment. Right now, that's the sentiment that the Fed tightening cycle has peaked, but and that's the reason the DXY is coming down. But if the DXY is starting to push to the upside, besides technical right now, that would mean that traders are not expecting Fed tightening cycle to be done yet, right? Even though we are expecting, at least I'm expecting a 25 bips now going into Feb. But if DXY is moving higher, that means some traders are still out there saying that it's not 25. There is still a chance of 50 bips going into Feb. I don't believe that watching the CPI data, core CPI, in fact. I don't believe that's the case. 50 is not the base case for me. But if Fed does 50, very likely the markets will absorb that and probably push probably 2% move here to upside or to the downside. Not really plotting anything beyond that as of now. So now the story shifts to earnings, and what I'm watching is tomorrow the banks. I want to know from the banks, the commentary from the banks, how what are they seeing going ahead into 2023, especially the second half. First half, I'm expecting it to be choppy, especially during the earnings. We might see some earning contraction. The guidance might come in a bit lighter than expected. But the commentary from the banks, especially looking into second half, that would mean a lot for position traders. So that's what I'm looking at right now. Now let's get back to the technicals here with Apple. Apple doing its thing. Five breaches, eight breaches, 21 breaches the bounce spot, right? So my trajectory was based on this for Apple. If it breaches here, then we're looking for Apple to stabilize around 130, 160. If that breaches, very likely Apple will come back down into this number, 130.60, around 130.60 to 130.20. This is where not really plotting anything below this number for Apple as of now. And watch this trade here. This happens in cycle. This works in cycles. Oversold, overbought, oversold, overbought. And now the next cycle is very likely to be oversold. Now, how deep of a oversold? I don't know. I'm expecting this RSI to come back down just like this and then bounce, right? And this trade is very much a technical trade and expectation trade here. People bought in because of the expectation that the CPI would be lighter than expected, and it was in line, and very likely people who took that position are now exiting that position, right? So that's what is happening here. So we are watching this number here again for 132.40 to 132.30 area for Apple to take a bounce. If that bounce fails, then Apple very likely will push into 132.66 and very likely 132.40. Cool. Now let's get into a bit of SPX here. Right here. So SPX, where is that? So 3970 area, a little bit, uh, maybe a bit higher, or at least 3973 is where I think it should open, and then the reason that we're looking at that is right. And to the downside, this should act as pretty decent resistance, pretty decent support. 3933, yesterday's bottom, around 3930, 3933 area. That should act as pretty decent support for SPX. So uh, if ES starts to push to the downside, I mean Apple is starting to push to the downside. We're watching this here, and the 5 is done. Now the 8 is about to get tested, right? So this is exactly how it's translating into ES numbers here. You can clearly see the ES moving lower, and we want to see ES come back down here, test this number 3989, 3990. We're looking for a bounce. If the bounce fails, we're looking for 3986 and very likely into 3977. So this is where the critical number 3977 that would translate to 3955, 3956 area for SPX. So that's what we're watching here. And if that breaches 3933 for SPX. Let's look at SPX here as well. 3956. This needs to hold for SPX. That breaches, then very likely it's going to come back into 3940, 3949, 3950. And the mean for the hourly is at about 3925. So expecting this to get tested and expecting this to hold, but if that breaches, we'll reassess the situation to the downside, and we'll go line by line here. 3924, 3918, then very likely 3905 area. This area 3905 to 39, I'm looking for a bounce around here. That breaches, definitely we are starting to reassess to the downside, very likely into this number here, 3893. And this is where I'm getting my numbers from. The 5 breaches, I'm expecting it to hold this here. The 50 and the 5, I'm expecting it to hold. But if that breaches, then very likely I'm expecting it to come back into 3893. Then the mean is sitting all the way down here at 3870. Not the base case for for on as expected number from CPI, but again, it's a psychological game where people bought into that position. Now they want to get out of that position, right? So that selling cycle might come into picture, and we will reassess the situation right about here, 3934. If that breaches, we will reassess 3900 to 3905. This should act as a major support because it was acting as a major resistance. Now it should act as a major support area. But if that breaches, we are going to go support. We're going to go look for lower, probably sub 3900. Cool. And the whole idea here for me to trade is this chart, this simple chart, right? The DXY chart got oversold, coming back up. This the technical bounce, expecting it to come back all the way here to 102.80. That clears 102.89, 102.90. That clears, very likely it's going to go hit this 103 number, 103.10, 103.11 number. So if again, if it pushes to the upside, then I'm expecting Apple to push to the downside. If Apple starts to push to the downside, then we are seeing some weakness in the market, SPX ES. And if Apple is if Apple is joined by another major move in major stock like Microsoft or Google or Amazon, then very likely we'll see accelerated downside. Nothing more than that today. Nothing, absolutely, there's nothing more than that today. Tesla, the expectation from Tesla is, why am I looking at this chart? Right. The expectation from Tesla is still right here if the technicals come through and if you see some sort of weakness going into DXY. Tesla 131 is still the expectation, and hopefully we should get that. Tesla on the daily is trying to get to its mean. Now it's and we still have this crossover right here. We still have the crossover on the Apple, so that is encouraging to the upside. And if this line starts to come back down, the mean if it starts to come back down, so very likely about 126 area. And if it comes down to 126 area, the mean for Tesla, I'm very optimistic about Tesla testing that 126 number again. And if that clears, very likely it's going to go all the way up here into 132. That's the understanding with Tesla. And to the downside, if Tesla breaches below here, 122 area, then I'm expecting Tesla to test this 119.30, 119.50 area. About 119.30, then probably 119 area. So to basically the 5 and 8, wherever that would be when the data populates, wherever that 5 and 8 would be, to the downside, I would expect it to come back down and test that number for and looking for a bounce. To the upside, wherever this mean would be at after the open, I'm thinking it would be around 126 area. Very likely it will come. It will push all the way up to that 126 area, test that area, and start to take a breather from there. That's the idea here with the Tesla stock as well. Uh, right here. Maybe Tesla should come back here, 122.40. That breaches 121.60. That breaches 122, 120.88. That breaches right about here, 119.68. So let's see how it goes. All right. Consumer price index summary. I bought Apple, one call, one put, green yesterday. Wonder how it'll open now. Darth, would you exit 2 weeks out long? At open, if they're slightly negative and re-enter. Uh, we are 2 weeks out. In fact, I'm also in 2 weeks out trades. So I want to likely feel out the first half hour how it's gonna go, or maybe yeah, maybe it's a good idea to just exit at the open, looking at DXY. DXY, to me, I think it should either take a breather at 102.80 or perhaps at 102.87, 88 area. Rather, let's round up at 102.90 area. So either one of those two areas should act as breather, and if the breather is sufficient enough for DXY to actually start push to the downside, and DXY, if DXY starts to come back down into 101.72 or 101.70 area, that will push the markets higher. And I'm thinking that should happen. Now, here is another issue, right? This is the 10-year chart, and this is exactly what is DXY mimicking here. The 10-year push down after the CPI, and it's a technical bounce here, and it is trying to bounce. Very likely, it'll come back, join the mean here, 3.53, and probably test this 3.536 and start to move to the downside. So, but if the 10-year clears this 3.53 to the upside, then I'll start to take this US 10 seriously again to the upside. Very likely we're gonna see another push all the way up into 3.56 here. So yeah, that's the trade here. So if DXY starts to clear this to the upside, probably I'll exit my longs, and probably when it starts to come back down again, I'll enter my longs again, or maybe just I'll hedge that trade, not exit the longs, just hedge that trade, and then if it starts to come back down, I'll pull out my hedge trade and stay with the longs. That's another way to play it. Or if you're into selling, when it moves up, probably sell something when it starts to hit this number, and then if it starts to take a breather from there, then you exit that trade. Cool thing. Microsoft, wanted to just touch base on this trade here, Microsoft trade. The idea, Where is that? The idea for Microsoft was for it to hit this number here, about 236, 235, and start to take a breather, and that is exactly what is happening. I'm very hopeful for this crossover on the MACD side of things. I've been watching this crossover here on the SMI. I'm not in this trade. I should have been in this trade, but I'm not in this trade. I was in this trade to the downside because this downside trade was very much clear to me rather than an upside trade. But there was a bounce would have clearly said that there was a bounce here, watching the RSI, watching this SMI, and watching these oversold conditions. And there was a bounce simply because it was hitting the 200 moving average, right? So the idea here was for Microsoft to hit this number, come back up, test its one standard deviation, clear that, push all the way up into the five. Same thing, it hit that and taking a breather. Now, if it starts to come back up here, then I think there you can assume that there is pretty decent strength in the market, especially with Microsoft. 236 clears, then very likely 237.17, 237.20 area. If that clears, very likely a push all the way up into 238.20. If Microsoft and Apple take this path to the upside, then we are expecting pretty decent upside in the markets as well. Right.